even if they've only owned their own primary residence, we explained to them, you have to have some part of your portfolio, be it in a REIT, be it in Cygnet, our private equity fund. You need to have some sort of real estate because it has that asymmetrical risk I know that you talk about on the podcast.
Are you looking to achieve massive success in your life without dealing with costly investment nightmares? If yes, then this is the podcast for you. Here, we provide engineers and busy professionals all the secrets and strategies to create multiple streams of income, build generational wealth, and live a meaningful life by design. Here's your host, Ted Patel.
Hey everyone, this is Ted Patel, and welcome to this week's edition of Decoding Cashflow Podcast. I'm here with Andrew McNair. Andrew is a president and founder of SWAN Capital and Cygnet. He manages over 300 million in asset and has 10 years plus of experience in real estate investing, including multifamily, RV park, storage, short-term rental, and industrial properties. He's also a public speaker, author, and adjunct professor, host of a weekly radio show called What Your Money Would Say, and podcast host of Rich, Young, and Powerful. Wow, that's a mouthful. How do you do all these things, man?
I don't know either. I don't sleep much, I guess. Well, I'm glad to be on. I'm really excited.
Yeah, Andrew, welcome to Decoding Cashflow. So I hope I didn't miss anything.
No, I think you had it all. That was very kind of you to share all those things I do.
All right. Yeah, of course, we'll dive deep into, what exactly you do and, dwell into some good suggestions for our listeners. But before we dive deep into your specific niche, if you'd like to give our listeners a little bit overview about yourself, how did you get started in real estate, or how did you start your firm, SWAN Capital, which serves as a wealth management firm also, right? And what's your main focus as of now?
Well, I probably started like many of your listeners. I read a book called Rich Dad, Poor Dad. My parents handed me a book called Rich Dad, Poor Dad, and I really resonated with that book because my dad was a rich integrity, but not so rich in material wealth. And I went to a private school. I could really see all the other people living that 1% lifestyle. And I thought, maybe I want more. And I was waiting. I was not yet waiting tables at Denny's. I was flipping hamburgers at McDonald's at this time. And so I fell in love with this idea that I could make money while I was sleeping. So at 14, I started asking my parents all these financial questions after reading this book. And they were so smart to say, we don't have the answers. Don't do what we did. You need to meet with a financial advisor. And so I met with this financial advisor, and he was like a Mr. Miyagi figure. And he said, I will teach you everything you need to know about finance. But here's the deal. I'm going to pay you $0 an hour. You're going to be doing basically wax on, wax off. You're going to be taking out the trash, filling out financial models. You're going to do whatever grunt work I need you to do for $0 an hour. And I said, that's a great deal. And so after school every day, I would leave school around noon of high school, and I would intern at this financial firm. And then by the time I was probably 14, half 15, I realized I'm making $0 an hour. I'm really never going to get ahead like some of these people with millions of dollars in their accounts. So I started waiting tables at Denny's on the weekend. And I did this telling all my friends that I wanted to retire early. And they said, retire? What are you even talking about? Well, fast forward 2 years. By the time I was 16, I'd saved up $62,000. Not bad for a punk kid at 16. And then 2008 happened, and I watched real life families, 401ks get cut in half, become 201ks. And I thought, this is the best time to go from being just a saver to become an investor. So I took my hard-earned life savings, and to my surprise, I thought I was Warren Buffett reincarnated. It turned into $147,000 in the stock market. And I thought I had the Midas touch, but then University of Hard Knocks, UHK, called in the tuition payment. And at the age of 19, you would find me screaming into my pillow and punching my mattress as hard as I could, because I ended up losing everything that I'd worked so hard for. And I said, I lost all that time, all those weekends and the holidays. I could never get it back. And as I was crying into my pillow, I wasn't like crying about the money. Who could cares about the money? It was caring about the time that I couldn't back. And so I always go back to that point in my life, because it was a pivotal time where I realized, one, And this is why I wrote my book, The Giving Crisis, about giving all my money away. The future wealth that I would build in the future is that I can never lose what I've given away. And so now we donate half of our income to nonprofits. And then Swan Capital was born in that day because I said, I never want anyone to ever go through this. They need to have diversification. They need to have other asset classes, because this is a true story. I was about to buy a duplex that's really close to my church. It's actually the block over. And I was going to buy this duplex, and it was for sale for $75,000. I'd already at age 18 done the due diligence calculations on how much deferred maintenance was needed. And I thought, I'm going to fix this place up. Well, I chose not to buy it, doubled down on this one stock, ultimately losing everything, which is very impressive to do, to lose everything. Picking the wrong stocks, you'll do that sometimes. And sadly today, in 2021, that duplex sold for $273,000. So all that cash flow I missed out on, I obviously never bought it, so I couldn't sell it for $273,000. And so this is what we teach clients with our Cygnet fund and Swan Capital, is that you need to be truly diversified.
Awesome. I love the part where you said you started working for someone at the age of 14 for free. And and that resonates with me also, because before I dived into real estate, I started working for someone for free. He was a contractor, like he used to build small properties ground up. And I wanted to get into real estate. I didn't knew about real estate, frankly speaking, at that point of time. So I started working with him for 6 months for free. And then I dived into real estate, started doing fix and flip.
People should get their kids and grandkids to do that more. I mean, Jim Rohn once said, don't ask what you're getting paid, ask what you're becoming. And so when you go to work, you should, even, especially in the beginning, when you have no skills really to offer someone, kids and grandkids, you should be promoting them to say, hey, go work for free, learn a skill. And even if it costs you your time, that's a good payment.
Yeah. And it's like, the things that you learn is worth anything that you will learn in the school. School, yes, it's a basic education is necessary, of course, but the outer side, the outer world, the experience that you get in the outer world is far better than what you can get in school.
You're spot on. People all the time say, I think I should get a finance degree. And I say, I have one of those. It took me 3 years. I blew past it. I only did it because my mother had actually paid for college prepaid. I skipped college. And when I went to college to get a finance degree, they teach in academia that you should have a mix of stocks and bonds. Real estate, private equity, hedge funds is nowhere in that conversation. And they're only talking in theories. They've oftentimes never done that themselves.
Absolutely. And mostly, right, I would say a segment of people who are working on the W-2s, 9 to 5. What I've seen is they are mostly into stock market. They don't diversify into real estate. Very few of them does, but mostly they are totally into 401k stock markets. And because they don't have much time to go find a good property, maintain the property. I don't know, but yes. Of course, real estate is one of the best asset to get diversified.
Of course.
Yeah.
It should be a part of what I believe is a part of almost everyone's retirement plan. And that's what we do for every client that's about to retire. We specialize in people 5 years out from retirement or 5 years in retirement. And even if they've only owned their own primary residence, we explained to them, you have to have some part of your portfolio, be it in a REIT, be it in Cygnet, our private equity fund. You need to have some sort of real estate because it has that asymmetrical risk I know that you talk about on the podcast.
Absolutely. All right, now let's, if you can give us, our listener, a little bit background about what Cygnet does and what SWAN does. I know you have two different firms. What's the main focus for those firms?
Yeah, so Swan Capital is an RIA firm. We're what's called an independent fiduciary. So we have no allegiance to some financial institution. And so we have an estate planning attorney, a CPA, all under one roof. And we specialize in retirement, helping guide families make sure they're ready for retirement. So that's what Swan does. And then Cygnet is one of the investments. So we manage our own Swan portfolios using Vanguard ETFs that we manage for clients. And then we have Cygnet, which is a real estate fund. So if someone understands that there's an SEC has investment classes, basically a caste system, if you will, of investor classes, where unless you're an accredited investor, unless you're a qualified client or a qualified purchaser, you have no access to invest in. And so for those clients that are accredited or qualified clients, they can invest in Cygnet. And within Cygnet, what we do is we invest in storage, apartment complexes, short-term rentals and RV parks, as well as flex industrial. And we do that in the Midwest, Southeast, and friendly West Coast states. And that all comes back from my background investing in real estate after I picked up my pieces and dust myself off from losing all my money at 19. And we can talk about that later, but that's how we invest in Cygnet.
Awesome. And is there any specific percentage that you like your clients to invest in Cygnet, like or in real estate? Let's say that
very good question. Yeah, because I'm an RIA, I have to answer to the SEC. If I was unregulated, like many people that have, let's say, a radio show, I'm not going to throw any people under the bus. They don't have anyone to answer to. Like when you have a license, actually, you have to be careful what you say. When you have no license, you can say whatever you want. So 20%, I think, should be the limit for most of our clients personally in something like a private equity, passive real estate investment. I say 10% would be a good target. So 10 to 20%. And so we have many clients that have invested $1 million in Cygnet. I got 1.8 million of my own money in Cygnet. And I got clients that invest 100,000 in Cygnet. So minimum is 100, but 10 to 20% of someone's net worth, I think, in passive real estate, now I'm not talking about active real estate, could be a good allocation for most people.
Awesome. And when did you start Cygnet?
Yeah, Cygnet is a new invention. So it's almost been 2 years. We started because of my frustration with real estate. So if anyone's ever rented a house before, I thought I should have 200 houses by the time I'm 40. And so what happened is I started climbing that ladder. No one had ever had that many houses where I was born. I didn't come from money. So no one ever told me, like, if you climb up this ladder, here's what to expect. Well, I started climbing up that ladder. I had 136 apartments, duplexes, triplexes, quadplex. So 54 houses, 136 units, and the cash flow was really good. The problem is I started getting decision fatigue. Like, what do you think we should do here? What do you think we should do here? And it just became a real headache. And like they say, it requires blood, sweat, and tears in real estate. And I had bled out enough times that I said, I need to start climbing down this ladder and start looking at some of these passive investments that I'm making. On the other hand, that someone else is doing the blood, sweat, and tears, which is great. They can make some money, there's skin in the game for them, but I don't have to be, I can just be a silent owner. I don't have to be an active owner all the time because I already have multiple businesses. And so that's why we created Cygnet and Win.
So that's totally focused on passive investments, as you said.
Exactly.
Awesome. And do you have the portfolio of 54 properties or not yet? You sold that and
I sold them all. I mean, just God is good. I actually sold at the right time. Like I probably put down at least $3 million to buy all those properties at least. But I think I sold them and exited for like $10 million, which was just the right. I mean, not because I'm a genius. It's because I had the right time, the right product at the right space. Like the Gulf Coast is not a hidden gem like it used to be here. I'm here in Pensacola, Florida. And so it's really expanded here. And I bought properties that usually don't appreciate, but they cash flow really well. Once I did all those renovations, I was able to, of course, take advantage of all that value creation.
Awesome. And tell us something about the first deal that you did under Cygnet. Like, what kind of property did you buy? What was the first deal?
Yeah, so we have an operator in Phoenix and Dallas that we probably know, and that operator presented a deal to us where it had a 2.1% equity multiple. So able to potentially double our money in 5 years, cash flowing, cash on cash of 6%, which again, I was used to more like 8, 9, and even 10% cash on cash properties. And because I bought at the right time. And I thought, okay, so cash on cash of 6%, we have a 90-10 split on this potential property. And that means they're going to get 10%. We're going to get 90% that we'll pass on to our individual investors. I thought this is a great opportunity. And again, when you invest in an operator that has a construction company, a property management company, they have vertical integration, that's exciting. And not all operators have that, but this operator did. But more importantly, that operator has combed through over 250 properties to find that one property. And what's even better is I never was born in Phoenix. I don't know the streets to invest in Phoenix. And I know that's a high population growth area. I want to be a part of that. But again, I don't know that area. And that's why it's so important to find someone, that is an operator that understands that space so that you can have that real quick learning curve in that location.
And as you said, I might know that operator too. Maybe we can just take it offline,
Yes.
But yeah, he's a really good one. He was on my podcast, earlier.
Yeah. And there's a lot of great ones. You just have to do your due
Yeah.
diligence. And when you're an RIA like myself, you have to do very deep due diligence.
Absolutely. And I'm sure it was a multifamily, right? The first one that you just
Yeah, that was a
mentioned.
multifamily, that first one.
All right. And what about the other assets that you invest in, the RV parks and storage? They are with the different operators?
Different operators. We actually are very intentional not to have too much in one area, not too much with one operator, and not too much in one property type. So, we may have a storage operator in Little Rock, Arkansas that gives us a secondary market, not a primary market like a Dallas or somewhere like let's say Miami. This is a secondary market that people think less of, smaller population growth, but still steady numbers. And those boost up the cash flow for Cygnet and the portfolio. But they also allow still really nice upside with a higher cash on cash, which is really good. You want to layer your passive investments with some with higher cash flow, with some with less cash flow, because if you have no cash flow, then it's a real long wait of 5+ years waiting on that return on your investment. So having that blend is really important and also very intentional.
Yeah, absolutely. And any specific criteria that you have when you try to sort out a deal, right? When you underwrite a deal,
course.
Anything specific you look into it?
Yeah,
Like
due diligence is very important. So when we do due diligence, we want to make sure we have a full background check on that individual. The second is we do look at underwritten return versus actual returns in the past. We do like people that have a track record. I hate it for the people that don't have a track record. They may be the best investor. They may be the smartest people. But at the end of the day, when you're investing institutional money, you have to be careful. I have to protect my investors. So, track record's important, but you want to see that underwritten return. You want to see conservative modeling. And all of that is so important. And you have to be asking, like, what if this doesn't go as planned? What are your contingencies if this doesn't go planned? Have you thought through all the things that can go wrong? Everyone can think about how quickly it can go right, but we need to think about how hard, how difficult it can become with interest rate environment, with again, a demographic change, a job industry change. If someone big industry pulls out of an area, we need to have de-risk that investment as much as possible.
And of course, the experienced operator would have gone through all these cycles and would know ups and downs during this. They might have seen the ups and downs in the real estate market and would have a proper backup plan for it.
Exactly.
All right. So in all these assets, right, you have invested multifamily, RV parks, storage, short-term rental, industrial property. As of now, what do you think, according to you, is the best asset out of it? Like where you see more upside?
Oof. I think that's tough. I mean, I believe in cyclical nature of investments. All investments have patterns. So I love Tony Robbins' quote about one, identifying patterns, one, taking advantage of those patterns, and maybe one day even creating patterns. So pattern recognition is so important. So all investment classes, I think, I mean, there's people that specialize in cannabis farms. I don't know a lot about cannabis. I don't smoke it on a not, I was about to say a regular basis. I don't smoke it on any time basis. But you know, if I knew about that, that would be great. I'd know how the cycle of that kind of property goes. I don't know anything about that. So I do know that storage has cycles with people and their spending habits. I know that multifamily has some depression resistance because people need housing. You know, short-term rentals, even depending on what type of traveling, some people may not travel internationally like during COVID, but they may do domestic travel. And so all of these have to be built into it because when you're managing, again, hundreds of millions of dollars for clients, you have to think about these cycles, and that a decade should not go by where one asset, again, does not perform at all. You have to think over that long decade and say, all right, this asset's going to have 3 to 4 really good years, and it's going to have 1 to 2 potentially bad years of that decade.
Yeah. And okay. So with the interest rate environment, right? This current interest rate environment, what do you think in next 1 year, where do you see multifamilies, investment in multifamilies
That's a great question. I'm going to get on my soapbox. I hated to cut you off, but I'm so passionate about this subject. This is not a communistic, socialistic country, or at least it shouldn't be. We shouldn't have such an emphasis on the Fed like we're like China. Like I'm just waiting to find out what the interest rates are going to be. The markets dictate rates, and we need to start de-emphasizing interest rate sensitivity. I think that is a very bad seesaw to be on. And anytime humans get involved with manipulating markets long term, that is a recipe for disaster. So I want to be the first one to tell you that we don't look at interest rates all the time, and nor should anyone for that matter. Neither the Fed or the analysts should be looking at the interest rate all the time saying, do we need to change it? Do we need to change it? I do think my forecast is that interest rates need to stay higher for longer. And I know that's controversial. I know that's what people don't want to happen. I know that the Wall Street market analysts believe that there's going to be cuts. They want cuts, but I don't think that's what's best for the end consumer. I do think that end consumers need to get used to these kind of interest rates because historically they're actually not that bad. It's not like it's the 70s or 80s. I think we've just got so addicted to low interest rates and easy capital that it's really, I don't know, changed our perspective, especially millennials and Gen Zs, and they need to get used to the times.
Yeah, no, rightly said, right? In around 2005-6, we had 6-7% interest rate before the market crashed. So it's not new, and it's not the only factor to determine the right property, as you mentioned.
That's right.
If the property can be underwritten using this interest rate, have a good cash flow at this interest rate, nothing wrong with that. And you can always
if real estate was about interest rates, it'd be interest, not location.
Yeah, absolutely. So, all right. And the other thing is, in your wealth management business, SWAN Capital, what are the other, in addition to guiding people on investing in different assets, what are the other services that you provide?
Yeah, thanks for asking. We believe that real estate is tax advantaged. There's no bigger fan than me. I think I'm a big fan of real estate, but it's not tax free. I'm not hallucinating that it's tax free. So tax free asset classes like Roth IRAs, Roth 401ks, life insurance, municipal bonds, and HSAs, there's 5 major tax free investments. So we like to recommend clients prioritize putting money into those types of accounts because they grow tax free. Now, those assets give us diversification into the capital markets, into the stock market. And so that's why we help our clients have money in our SWAN portfolios that we manage in-house. It's not some yuppie in New York City trying to manage their money and has no skin in the game. And I think that's my biggest frustration, if I get back on my pedestal about my gripes with the industry, is that the SEC does not require financial advisors and does not require me to invest in what I recommend to clients. And I've seen financial advisors actually recommend one thing and live another way. And in other areas of a life, like in faith, we call that hypocrisy. So I'm two-faced. I'm living two different lives, and that's a problem. And so I believe that we should own what our clients have. And so we recommend that they invest in those portfolios, and we have our own money in those portfolios.
Okay. And any specific advice you'd like to give to a person who is about to retire within like next 15, 20 years?
Yeah,
like how
I think
should
you
they
need to,
how should they strategize their retirement fund?
how many years out from retirement?
Maybe 15, 20 years.
Oh, 15, 20 years. That's a good long runway. I think you prioritize making sure if you're working for another person that you don't avoid. I just met with someone recently that was not actually getting their 401k match, which I thought was pretty wild. So you got to take your 401k match. You do need to put money into Roth IRAs for the diversification of taxes. And if you like real estate, you really enjoy real estate, I think you should be investing in active real estate, and you should also have some passive real estate. And by doing that, you'll have a respect for those passive operators that have a lot of work on their hands, and they need time to actually fulfill the business plan instead of looking at quarter to quarter. Because if you manage your own properties, you would understand every quarter is a little different. And as long as someone is not just lazy and you have a lazy operator on your hands, they should be progressing through their business plan. And so a 15, 20-year period, the biggest mistake I see most people do, and I sadly have to tell people that we invented this thing called retirement. For thousands of years, people lived and then they just died with their hands on the shovel. And that was fine. I mean, most people enjoyed what they did. But the sad part is most people are not saving enough. The average American, this is so sad, they spend 92 to 96%, depending on the person, on themselves. They spend most of their income on themselves. They save 6% of their income. And if they're lucky, or if they're generous, I should say, lucky enough to enjoy the cheerfulness of giving, they only give 2% of their income. So we got it completely backwards. I personally believe that you should give 10%, even if you're an atheist, to some great organization. 10% of your income gross should go to a great organization or a church. 20% should go to long-term investing. And then the other 80%, you should learn to live on and live really well on that. That 70%, you should learn to live really well on that 70%. And if you do that, you will brute force financial success, in my opinion.
Awesome. That's a great advice. All right. So now maybe a little bit more on the real estate side, right? Earlier, before we started recording the podcast, right, when we had one-to-one, you said mostly you tie up with the partners who are good operators, and you invest with them. Have you ever thought about being an active investor, like an operator, being yourself as an operator?
Yeah, our fund gives us the ability to do that if we chose to do that. Okay. At this present time, we're not going to do that just because time constraints, and I've already done that, and I lost most of my hair doing that. If you can't tell, if you're not watching the video, I don't have any hair. That's not why I lost the hair, but it is a coincidence. So I don't want to be stressed out once again. I rather hire really good people to do a job, to know that area, and to actually operate a business plan. And so that's what we're doing. We're limited partners in those properties. We're silent owners, and I'm hiring those people, and they're hiring my capital to put it to work, and I'm hiring them to follow the business plan.
Get their expertise. Yeah, absolutely. All right. So now talking about your, I see that you are also a public speaker, right? So any specific topic that you cover during your
my talks,
on stage? Yeah. Anything specific do you cover?
Yeah, I mean, one of the things I talk about all the time is total wealth management, and this is, I think, a high priority, and it's not talked about enough. Is if you follow successful people, success leaves clues. Family offices that were invented by the Rockefellers have an integration of tax planning, estate planning, and financial planning. And they should not be looked at in separate vats or separate swim lanes, but they need to be looked at as synergistic. Just like if you build a house, you would have the framer would talk to the plumber and talk to the electrician. They would be on the job site together. And most people are just kind of DIYing it together, and they do it with Band-Aid, they do it without a permit, and they hope it works out. That's not a good strategy for your retirement. You need to bring in an estate planning attorney, a tax attorney, a CPA. And that's why we bring all those people under one roof. And so I talk about that in my talk, that total wealth management is the future. And I would recommend those people demand that from their professionals, or find a professional that does do that. My other talk, I talk a lot about giving your money away. I lived my life very greedy, and as someone that's very ambitious, it's very natural for me to always be greedy. And it's sad because people miss out on the joy of living for something greater than themselves. And so what I teach in the book, The Giving Crisis, is how we gave most of our net worth away, and we recommend others, as their income increases over time, that instead of just increasing your spending, which is what most people do, a really great book is The Psychology of Money, by Mr. Housel, I believe is his last name. Is he wrote this really great book, is how that you should just look at what people do when their expenses, when their earnings increase, their expenses increase. Most of the time their expectations increase faster than their earnings. But what we need to do is actually say, no, I got a 3% raise, a 5% bonus I didn't plan on. Why don't I give some of that to my future me, called investing more, increase my savings rate from 20% to 22%, but also increase my giving rate from 10% to 12%. And if you do that, I think you'd live a lot more satisfied life. I think it's a very interesting phenomenon how suicide and anxiety and depression keep on going up. So does people's wealth levels, and they're correlated. You won't find happiness in more money and more wealth. And it's, I think, a lie that we've been told. Yeah. I mean, that quote goes that you've never lived a day in your life until you've helped someone that could not repay you.
Yeah. And it gives you a different kind of pleasure, like happiness. When you give away something, when you help someone, it just gives you a different, vibe. Like, okay,
Exactly.
I've done something good in my life, or I've done, to improve a personal, or improve a person life or a community. And it also gives you a self-confidence to, to do whatever you're doing, right? In whichever field you are. Yeah.
It gives you a reason. I mean, like, I built Cygnet and SWAN Capital to extract capital for myself. Obviously, number one is to bring value to the marketplace and help our clients get where they want to. But the second reason that Cygnet and SWAN Capital exists, I'm not avoiding this topic. It's for us to make a profit and extract as much money for SWAN Capital. And so I tell our employees and our team, like, you're on a mission, doing a noble mission, and we're giving half our profits away because there's other people that need us and need our funds. We're raising capital for the rest of humanity. We're raising capital for ministries that need to be done. And that's what profits exist for. And that's what we're going to continue to do. And that drives our ambition that much more, but in the right way and in a healthy way. And for me, as someone that's ambitious, that struggles with workaholism, as I like to say, I mean, workaholism is the only addiction people will applaud you all the way to rehab. Is they'll say, great job, you're more successful, but your family hates you and your kids don't want to spend time with you, and your wife is mad at you, and you're working on your second divorce. Well, that's not the applause I'm looking for. I want someone that says, you know what, I've dedicated my life to solve this end, to be the means to an end, to solve a crisis. And that's a life well spent. So I encourage you, as you build wealth, to do it intentionally for others and not just for yourself.
Yeah, love it. Because we also, we give away money for the kids who are less privileged, who doesn't have much money for education. So
I love it.
So we help out. Of course, our main focus. We send most of our money to a different part of the world, including India.
Sure, of course.
We're here, of course. That in US also, basic education is free. But in the other part of the world, the basic education is also not free. So we help those kids And we think,
I think that's great.
if a kid can make his life, he can make a life for his family. The future is bright for everyone surrounding that kid.
Generosity is very contagious.
Yeah.
And it creates ripple effects across the globe. That's the butterfly effect. If people want to talk about the butterfly effect, is being graceful and giving grace and mercy and sharing what you have.
Yep. Love it. And what are your main focus, like in the charity, like giving away, or what are the different areas where you try to help people and communities?
Oh, yeah. Thanks for asking. We give to the Samaritan's Purse. Samaritan's Purse helps out with a lot of people that are migrating from one area to another. So that's one big deal. They also do for underprivileged children. They share very necessary things that they need. It also gives them something for Christmas, which is really cool. And it's an opportunity for them to share the gospel to them. Word of Life is another ministry that I feel strongly about and that most of my net worth goes to. And then there's a lot of other ministries. That's the whole reason why I started my podcast. So my podcast is the Rich, Young, and Powerful podcast. I've brought on people like some really cool people like Larry the Cable Guy, the comedian, Dr. Ben Carson. I've had people, I just brought on Kurt Warner, the professional football player. Some just really great people, because I want people to learn about all the great causes that exist out there.
Yeah.
And there's so many great foundations and great charities, and people like to throw stones that charities are inefficient. They're very efficient if you give to the right ones.
Right one.
And so we vet those and we bring them on the podcast and we shed a light on them so that people can learn more about them.
That's a great cause. All right. Now, let's say if someone who doesn't have a company who is not a part of the company like SWAN Capital and wants to start their account with a wealth management firm, how would they vet out the right firm? What are the specific criteria?
Yeah, I'm glad you asked that. Interviewing a financial advisor is not easy. So, I actually been doing this, as you know, since 14. So it was actually one of the hardest articles I've ever written was how to interview a financial advisor. And so if you type in interviewing a financial advisor, Andrew McNair, McNair, MarketWatch will pull up an article that I wrote for them about how to do that. And it's 7 questions. And one of the hardest questions that you should ask someone is if they're asking you all these financial questions to recommend an investment for you, or most of the time, sadly, sell you an investment, then you need to turn the tables and say, can you share with me what your financial plan looks like? Can you show me your financial investments? And if they blink, if they don't want to show you, I would be concerned, because Warren Buffett once said, Wall Street is the only place people ride to up in a Rolls Royce to take advice from someone that took the subway. And that shouldn't be that way. When you take advice from someone, you're trading places with them. And that's very dangerous. So be careful who you take advice from.
Yeah. All right, great. Andrew, I'm just loving this conversation. Maybe we can keep talking for hours, looks like, but wanted to be respectful for your time also, so we'll move on to the final round of questions. Are you ready?
I'm ready. I hope I am.
All right, awesome. So the first one, which is the one book that you'll recommend, which had the most impact on your life or on your business?
Yeah, the book of Ecclesiastes is the most challenging. Like, it's a human experiment based on history. King Solomon was like the richest person that ever lived. He like plummeted the silver market. Silver became worth as much as tin. So silver was not valuable. That's how wealthy he was. Like, he had more wives than anyone. He had more money. He had more fountains. He had more land. Like, I have all this acreage and I have built a lake. He built such a big pond at his place that you can see it from space still today. Like, yeah, that's pretty impressive. And so he's done this human experiment where he's like, I'm searching after happiness and I'm still not fulfilled. And all the things that, all the ads say, like, if you had more sex, if you had more money, if you had more of this, you would be happy. And he wasn't. And so it's like, I could spend my life called trial and error, trying to pursue that and get the same result. And I probably won't do it in such a good fashion as him. Like I won't have as much good threads as he did. And I have wasted my life. And so that's why I talk about in the book, The Giving Crisis, like you don't have to waste your life. Like you could figure out that the reason you were created was to glorify something else other than yourself. The second book I think is practical for anyone that owns a business is The Road Less Stupid. That one is one of the best books I've ever read, is The Road Less Stupid by Keith Cunningham. So you got to check that book out.
I'll surely put it in my list. Road Less. Okay.
Yep. The Road Less Stupid. You cannot forget a title like that.
Yep. All right. Okay. Noted. So the next one is, what is the best business or investment advice you'd like to give to our listeners?
Ooh, the best business or investment advice. That is so good. I could go in multiple different angles. Investment advice is, I didn't take this advice, so, take it how you will as someone that didn't follow his own advice, but you can marry more money than you can make in a lifetime. So if you're trying to be wealthy, look at it that way. I actually had one friend that did that. Like he's with a doctor. So, that worked out. I married for love and I don't have any regrets. So there's a funny investment advice for you from a financial advisor. Business advice. I think that many people want their clients to be friends. I want to go to my friends and family. I think that's a mistake. A lot of people say, I think I should start by hiring my family. I think that's a mistake. I've did all these mistakes. You could go through trial and error, which is a poor teacher, or you could listen to me, because I wish someone would have sat me down and said, I know you want to go to your friends and family. You want to do that because it's easy. It's the path of least resistance. If you build a better marketing machine, you'll attract strangers that trust you. And you should do everything and build things so that they do trust you. And if you haven't, then you haven't worked hard enough in the wee hours to make your product, your business that much better. And for the people that want to hire their family, personally, I wasn't fair to my family. I asked more from them than I should have. They asked probably more from me than I probably should have gave in some ways. And that's what family does, because we love each other. But at the end of the day, you're shortchanging your processes and your systems, and you should have spent more time working on your systems and processes.
That's a great advice. Yep. All right. The next one, which is, what are your main source of information to learn and grow?
Yeah, I mean, I'm going to go in a different direction you might not expect. Like, I believe that you should be agnostic to your mediums of education. You need to hit multiple spots of the brain. So I listen to a podcast while I'm getting ready. Like, all my time is always used. My time that I'm miscellaneous, doing things like folding. I still fold my own laundry most of the time if the cleaner's not doing it. And so whenever I'm doing a meaningless task like that, I am listening to a podcast. I try to read one book a weekend. I challenge myself to do that. And then, so I'm reading, I'm listening, and then I'm also getting in events and masterminds. And that's all to avoid trial and error, because trial and error is a slow process and it's painful. So I want to make sure that I learn from people so that I don't have to do it myself. And you have to put yourself in those masterminds. You are only some average of the 5 people you spend the most time with. And so you need to be very careful with those relationships. It doesn't mean that you never talk to them ever again. It just means that you limit the time that you talk to people. And so we just have to be very intentional with that.
I like that too. All right, the final one. How can Decoding Cashflow listeners get in touch with you?
Yeah, so there's 2 websites, SWAN Capital. SWAN stands for Sleep Well at Night. So you go to swan-capital.com and you can learn more information about Cygnet and SWAN Capital there, or you can go to richyoungandpowerful.com to check out our podcast, to check out my blog, to check out my book. It's all on those 2 websites.
Awesome, Andrew. It was a pleasure talking to you, and we had a great show today.
Oh, thank you so much for having me. Anytime.
All right. Thank you.
Thanks for listening to Decoding Cash Flow, brought to you by Aster Capital. If you found value in this episode, then please share it with someone who you think could benefit from it. And make sure to act on what you've learned. If you want Ted Patel to personally help you reach your goals, then feel free to set up a one-on-one call with him. Also, visit us at astercapital.com for more free resources. Content of this podcast is for informational purposes only. As always, please consult your own advisor before making any investment decisions or setting a course of action. Thanks again for joining us on this episode of Decoding Cash Flow, and we'll catch you in the next episode.